So today, we are going to pick our first stock for our video series portfolio on how to turn $20,000 into $1 million in 10 years. All right, so I've narrowed it down to a DBE and win. Why? Because these two stocks have been beaten down this year. As Warren Buffett said, be fearful when others are greedy, and be greedy when others are fearful. So let's take a deep dive into Adobe and UnitedHealth Group. First up on the list, we have a DBE or Adobe. Now, before I tell you about the fundamentals of Adobe, let me tell you what Adobe actually does. This one, it's not as simple as it seems. Adobe isn't just some boring software company. It's the kingpin of creativity. Think Photoshop, Premiere Pro, Illustrator. These aren't just programs. They're tools that every content creator, graphic designer, and marketer swears by. But here's the twist. Adobe doesn't sell it once and walk away. They've locked in a subscription model. Every month, individuals and businesses pay a recurring fee to access these tools. That's recurring revenue, passive income at scale. And Adobe isn't resting on its laurels. They're doubling down on artificial intelligence. Tools like Firefly, Generative Fill, and Adobe Firefly are at the forefront of this AI revolution. These aren't just buzzwords. They're products that can drive massive value, whether it's helping designers craft realistic images or making video editing a breeze. So why is Adobe worth nearly $300 billion? Well, it's not just about the iconic products. It's about the recurring revenue stream and the potential of AI to scale it even further. If you're a long-term investor looking for growth, stability, and a piece of the AI pie, Adobe might just be your ticket. Next on the list, we have UNH or UnitedHealth Group. Now, before I get into the nitty-gritty of UnitedHealth's financials, let us talk about what the company actually does, because there's more to them than meets the eye. UnitedHealth isn't your typical insurance company. They're a healthcare powerhouse with a dual focus. 1. Insurance, and 2. Healthcare services. Their insurance arm, Unit Healthcare, covers over 130 million Americans. Think health plans, dental, vision, employer-sponsored insurance, the whole 9 yards. Now let's shift gears to their second focus, Optum. This is where data, pharmacy, and care services come in. Optum dives deep into data analytics and technology. They own the largest independent pharmacy network in the U.S. and provide care services across the country. In essence, UnitedHealth controls a significant chunk of the healthcare pipeline from insurance to delivery. So why is UnitedHealth worth over $500 billion? It's not just about size. It's about their unique position in the market. They're leveraging data, technology, and a vast network to manage costs, improve care, and drive efficiency in an industry ripe for disruption.
Wow.
If you're looking for a company that can weather economic storms, grow through innovation, and make a real-world impact, UnitedHealth might just be your pick. Now that we know what Adobe and UnitedHealth do, let's put them head-to-head across 6 key financial metrics: revenue growth, profit margin, EPS growth, return on equity, debt to equity, and their PEG ratio. Think of this as a strategic investor's scorecard, starting off with revenue growth between 2014 and 2025. Adobe has seen its revenue skyrocket from $4.1 billion to over $20 billion, a growth of around 5 times. On the other hand, UnitedHealth has grown from $130.5 billion to $353 billion in annual revenue, marking a growth of around 2.7 times. When it comes to growth, Adobe takes the crown with its explosive expansion driven by cloud adoption and cutting-edge AI tools. UnitedHealth, while still growing, faces more volume-driven challenges in its large, mature markets. Now let's talk about profit margins, a critical aspect often overlooked by investors. Adobe boasts an impressive gross margin of 89.3% and a net margin of 33%. These figures highlight the robust profitability of Adobe's software business model. However, UnitedHealth's margins are more modest, with a gross margin of 20.8% and a net margin of 6%. The stark contrast in margins underscores the challenges in UnitedHealth's industry as it grapples with rising medical costs and regulatory pressures. Moving on to EPS growth, which tells us how a company's earnings per share have been trending over time. Adobe's EPS has been on a remarkable journey from $1 to over 10.00 in the past decade, showcasing an impressive growth of 10x. UnitedHealth, however, has experienced a different trajectory. While it reached a peak in 2016, the company's earnings have since declined, hovering around $12 to $13 after several downward revisions this year. This trend reversal in UnitedHealth's EPS reflects operational strain and weakening demand in a maturing market. The next metric on our radar is return on equity, or ROE. This measurement is crucial as it reveals how effectively a company uses its equity to generate profits. Adobe has demonstrated a strong ROE of 51.6%, reflecting the company's prowess in generating returns for shareholders. Meanwhile, UnitedHealth's ROE stands at 21.2%, a figure that has been steadily declining over the years. The drop in ROE is mainly attributed to increased competition and regulatory hurdles within UnitedHealth's industry. Now let's focus on the debt-to-equity ratio, a measure of a company's financial leverage. A lower ratio generally indicates a stronger financial position. Adobe's debt-to-equity ratio stands at 1.46, signaling a moderate level of leverage. UnitedHealth, on the other hand, has a higher ratio of 2.07. This comparatively high ratio reflects the capital-intensive nature of the healthcare industry, which UnitedHealth operates in. Finally, we arrive at the PEG ratio, a valuation metric that combines the forward price-to-earnings ratio with the company's expected growth rate. Adobe's PEG ratio is currently at 0.87, suggesting that the stock might be undervalued given its strong growth prospects. UnitedHealth, however, has a lower PEG ratio of 0.41. While this might seem attractive, it's primarily due to weak growth expectations rather than undervaluation. When we analyze all of these factors together, one clear winner emerges: Adobe. It's important to note that both companies have their strengths and weaknesses, and the choice between them should be based on individual investment goals and risk tolerance. However, based purely on these metrics, Adobe's dominance in multiple categories makes it the clear winner. Superior revenue growth, profitability, EPS growth, ROE, and reasonable valuation compared to its expected growth make it a compelling choice for investors seeking long-term growth and stability. UnitedHealth, while strong in certain aspects, faces challenges in areas such as profitability, EPS growth, and a high debt-to-equity ratio. It's crucial for investors to conduct thorough research, consider these metrics, and make informed decisions aligned with their investment objectives. In conclusion, both Adobe and UnitedHealth are leading players in their respective industries. Adobe, with its impressive performance across key financial metrics, particularly in areas like revenue growth, profitability, and EPS growth, presents a compelling case for investors seeking long-term growth opportunities. UnitedHealth, while facing challenges in certain areas, remains a significant player in the healthcare sector and may appeal to investors looking for stability and exposure to the mature healthcare market. Ultimately, the decision between the two comes down to individual investment goals, risk tolerance, and future projections. By carefully analyzing these factors and keeping a close eye on the evolving business landscapes, investors can make well-informed decisions that align with their financial objectives. Today, we had purchased 11 shares of ADBE at $344.42. We have 4 more stocks to buy for our $20K to $1 million portfolio in the coming days. Before we go, remember to subscribe. I'd appreciate it. See you guys next time.